Getting the WPI data as well this time around. Remember, the number in July was a negative 0.58%. Let's see what the street is estimating this time around. The poll was the few pollsters that there are for WPI right now. 0.3% is what the expectation was, and there you have it at the breaking news. 0.52 versus a negative 0.58, a mild inch up higher, but that's something that I suppose a lot on the street were expecting. This was just a little more than that. The poll was 0.3%. Now it's come at 0.5%. Lata is here with us in the studio. Lata, does this warrant any attention, the mild uptick versus the poll?
Well, it actually merits attention for the GDP, not so much for inflation itself, because the mandate of the Reserve Bank is to follow the consumer price inflation. However, WPI is an important conduit of inflation, but more importantly, it is the number with which you deflate many products in the current prices of GDP and arrive at the constant prices. That has worked to the advantage of the real GDP in the previous round in first quarter. Okay, to come to the number, this 0.3 is the Cogensis poll. Our poll said 0.4. Okay. It has come in at 0.5. And everybody in the street will take it with both hands, because the fall of WPI is leading to a fall in nominal GDP. And when nominal GDP falls, or rather slows, not falls really, slows, then you have an impact on corporate earnings, you have an impact on tax collections. So you don't want the nominal GDP to fall too much. 0.5% is actually a worry even for manufacturers who want to manufacture those products. By the time you manufacture, if you don't have an advantage and products are just about 0.5% higher or even lower, as it was last month, minus 0.58, then that is actually a deflationary hit to ambitions of productivity. Manufacturers won't like it. But at 0.52, we will take it with both hands, the marginal uptick. Core inflation also is up 1.7 compared to 1% last month. So there are some of those positives. Food inflation is also higher. Yeah. It was, minus last time, and I think now it's coming at plus 0.2. It was minus 2% in July. So all those are positives.
Number, Lata, I'm not sure how much of that would be the reason why the food inflation is higher as well. The India August vegetable index is up 5.6% on the month, and that's the highest gain that we're seeing across all the parameters. If you look at manufactured products, it's 0.2%. Fuel and power is up.
Let me stop you there, because vegetables are
not too much.
Month-on-month comparison is wrong, because as the monsoon advances, there are supply dislocations. Trucks don't move so fast. So if you have to compare these products year on year. It is a very, very seasonal product. So year on year, I don't think this will be very much. In fact, I wouldn't be surprised if vegetables will be far lower, because last year we had a raging onion inflation and potato inflation. So in year on year terms, this will not be worrying. That is why the overall food inflation is only 0.2. So clearly, in year-on-year terms, it's not very big. But maybe we should quickly get to Aditi Nayar, the chief economist at ICRA. Aditi, I guess you are able to see on your own screen some of the important numbers. 0.52 as far as the headline inflation, WPI is concerned. Food inflation, again, 0.2% higher compared to -2 in July. Manufactured products inflation is fortunately at least a little better at 2.56% compared to 2% again in July. What have you made of all these numbers? Should we see WPI going up, or is this a blip and you will again see minus numbers in the next couple of months?
Thank you, Lata. So overall, we were expecting the number to come in at 0.5%, which is where it has come in. And the broad internals for food and core inflation seem to be in line with what we had expected. Now, in terms of the outlook, I do think that the overall food inflation will slip back into a deflation in the month of September. That's what the early numbers for food items are suggesting right now. However, I do think that the headline inflation is going to inch up further. It's probably going to remain sub 1%, but it's going to inch up further in the month of September and perhaps come down after that. So a bit of a mixed trend in terms of the headline and the food inflation trajectory that we're expecting over the next month or two. But overall, I think the WPI is still just about going to be an average of 1% for FY26. So still going to be a very, very low number this year.
FY26 is 1%. Okay, not just this quarter or something. So we should therefore expect a good real GDP number for July, August, September as well?
Well, in terms of the real GDP number, I think it's going to step down from the number that we got for Q1. That surprised us quite positively. And a couple of the areas where the momentum is going to be very different in Q2 as compared to Q1. One is the government capex, where there was a lot of front loading in Q1 on a low base, and that's going to automatically turn. And the second is the upfronting in shipments that we saw, particularly to the US. That momentum will also dry up a little bit in Q2 and thereafter. So my sense is that the real GDP number in Q2 is going to be significantly lower than Q1.
Q1. Okay, but there is an advantage of a low base. Last year, it was only 5.6% Q2. So perhaps a little bit of help from that. But Aditi, a final question to you. What should we expect from the Reserve Bank on October 1st with CPI below expectation, WPI still near negative or flat?
So Lata, quite an interesting scenario for the MPC, particularly with the GST related changes, expected to bring down the CPI inflation below what had last been projected by the MPC. While that would suggest that there is room for a rate cut, the expectations on growth are better now. My sense is that we'll get a pause at least in the October policy. We do think that the extended pause is here to stay.
Okay. All right. We'll leave it at that, Aditi. Thank you very much for joining us. So WPI inflation coming in at 0.5%, a little better than the -0.5 month ago, but still going to be barely 1% for the full year. Just a word more on the GST cuts that Aditi alluded to. Because of that, a lot of economists are lowering their already low full-year CPI number. The CPI number was standing at 3.1, 3.2. The Reserve Bank is at 3.1. But now, today, we had a Citibank forecast that it could be 2.9 because the GST-related price cuts will mean at least about 15-16% of CPI is going to become cheaper. And therefore, that makes the October 1 policy once again live. I wouldn't be surprised if we get a deeply divided poll when we present it. So it's going to be an interesting October 1 policy. But on WPI, we once again remain subdued, except that food inflation has inched up a wee bit for the better. That's it from WPI.
Absolutely. But Lata, thank you so much for that. Keeping an eye out on WPI, CPI, as well as that October meeting. That's going to be the key now, right? Where we're going to be headed. Thank you so much for that, Lata, as well as the interaction as well. But on that note, let's just slip into a very short break right now. And a reminder for our viewers, right? Unlock the world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, our premium members only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists along with curated studio tours, e-learning sessions and masterclasses and curated lifestyle benefits.